Dan is here from Equitus. Thank you so much for coming on in.
Good, yeah. No,
now, tell me about this booklet. This is a great booklet that you've put together here. 7 dumb things smart people do with mortgages.
Well, it's really come about because there are obviously very smart people with mortgages, and still see a lot of them doing some basic things, because it's quite easy to get very single focused on just looking at the interest rate, especially if you're due to refix. But that's not the only thing. If you're looking at the actual amount of interest you're paying, that's the dollars that you're actually paying. So I want to sort of get people more aware of that. Yeah, there's a lot of other things. Obviously, the more you can do to cut what you're losing through interest, the more savings you'll have, the more you can do with other things as well. Yeah.
Now you're talking long term. As soon as you're talking interest and connected with mortgages, you are starting to look at a long term plan.
Yeah, long term particularly, but short term as well, because we don't want to take anything off anyone right now. It's not about, for what we do anyway, it's not about sort of paying any extra. It's really about just reducing the amount of interest that you're paying, so that use that to pay off the loan faster. But yeah, it's really giving people a bit of idea as to other areas that they can do, because there's a lot of people with ideas on mortgages. There's no shortage of that. The shortage is actually getting the application done properly, and that's where a lot of people with good ideas tend to go wrong, tend to end up paying more than they really need to.
Point number 1, people don't check the maths.
Yeah,
I think you're right. You know, that figure, or your loan repayment, whatever, if you're shuffling it around a couple of accounts, it comes through on your bank statement as one lump sum.
Well, it's really, we don't have accurate figures for New Zealand, but in Australia, 54% of account statements are inaccurate, and 80% of those are in favour of the bank. So you're just checking the maths, like the time remaining. If it's supposed to be 24 and it's actually 26, or 2 years worth of payments at, say, $25,000, that's $50,000 difference.
Yeah.
So it's a pretty small thing, but if you don't do it, well, you don't do it right, I should say.
And you don't realise that it's there.
Yeah.
Okay. Obsessing over interest rates.
Again, yeah, the interest rate itself, it's not as major factor as people expect when you, especially when you sort of look at it over long term. There's other things you don't have a lot of control over it. Yeah, other things you can do.
Right. So worry about some of the stuff that you can control, and let the Reserve Bank worry about their interest rate.
Exactly.
That sounds like a good idea. Inappropriate opinions. Now, everybody seems to have the magic fix for
they do.
this.
Everyone's got an idea as to what's going to be best, but you actually really need to get down to specifics and actually work out numbers as to what is going to be best, because what worked for someone might not be right for someone else, and what we do isn't always right for everybody either. So we're careful on that.
And that's the beauty of going somewhere where you're getting personalised service.
It is, yeah.
Now, to consolidate debt badly, there are an awful lot of ads on the telly about, consolidating debt, and hey, come to us and we'll put all your debt under one umbrella.
Yeah.
Is that not necessarily the way to go sometimes?
Depends how you handle it.
Okay.
Yeah, sometimes if it's done well, it will save you interest, but otherwise sometimes if you're taking like a small loan and adding it into your home loan, if you're stretching the time out, then you actually just, the amount of interest you'll pay over that time will increase. You pay more. Repayments will be less, but the actual amount of interest that you're paying is more. So just need to watch out for things like that.
Now 5 and 6 kind of sit together a wee bit. Set and forget solutions, and using the revolving credit or flexi loan. Because a lot of people kind of do a set and forget plus a flexi loan as well.
Well, that's one of those things I mentioned earlier. Something that sounds good and encouraging, but really not very useful. I'll set it up. Just you pay everything on my credit card, paid off at the end of the month, should be okay. Well, should be, but the statistics are not very many people are doing very well with it. So,
and the final point in here is to change lender unnecessarily, and so that's something too, is to look at whether you actually do need to change or whether you just need to restructure within your current lenders.
That's right, because the cost of changing not always a good idea.
Look, this is a fabulous little booklet. If you would like to get your hands on this booklet and get some of the great advice that Dan has to offer, you need to contact Equitus. They're based at 20A Leslie Hills Drive in Riccarton. You can call them on 348 0834 or on a mobile 021 619 800. Check it out online as well. You need to get yourself a copy of this booklet. They'll send it out to you for free. www.equitus.co.nz.